Good morning, everybody, and welcome on this very snowy Thursday morning to our PPP webinar on the latest updates regarding these issues. My name's Carissa. I'll be hosting today from the back end. We'll be doing some polls for those of you who aren't familiar. I will be shooting off some polls about every 15 or 20 minutes or so. There will be a slide that pops up noting which poll number we are on, and we will also announce it. We have our tax group joining us today, Bob Grossman, Don Johnston, and Mike Weber, who have been with us for the last two PPP webinars we've done back in May, if you are with us at those points. A few housekeeping notes unrelated to polls. This will be worth 2 hours of CPE credit, and in order to attain that, you do have to answer the polls, but also the survey at the end as well. If you have any questions, feel free to shoot them in the Q&A portion. We will not be able to get to them all, but we have a pretty comprehensive program today, and I think we'll get to most of them within the materials. If not, I'm sure someone from our tax group will be able to assist you with that after the program or sometime short after the fact. With that, I again welcome anyone new. For those who've been with us, welcome back. And with that, I'm going to pass it off to Bob.
Thank you, Carissa. Good morning, everybody. We appreciate again the substantial support and interest in our Paycheck Protection Program seminars or webinars. And as Carissa said, this is our third seminar or webinar on this particular topic. Obviously, dating back to early in the summer when the activity within this program was just getting started. We had a second one later in the summer, and this is our third. And in addition, Mike Weber and I have done a presentation in conjunction with our firm's Continuing Professional Education Day on November 12th. Interestingly, through all of those intervals between webinars, there's been substantial developments, and today is no exception. So we're looking forward to a good program. We're looking forward to hopefully sharing some information that makes your life a little easier and helps clarify some of the difficulties that are there in conjunction with, at this point, applying for loan forgiveness in conjunction with the PPP loan program. Don, Mike, and I would like to recognize Mary Lou Harrison and Carissa Yashewski for all of their hard work in seeing that our Corona Resource Center on our website is kept current and maintained. We also want to thank them for the hard work they've done with respect to these webinars. They put a lot of effort into preparing slides, the invitations, monitoring attendance, making sure technical issues are addressed prior to Don, Mike, and I presenting, event coordination, CPE certificates, and more. Clearly, I assure those of you today that are attending as guests, we could not have done it without Carissa and Mary Lou, and their efforts are greatly appreciated. We also need to thank Glenn Dragovic, our technology chief, or I guess I asked Don his title this morning. He says the Grand Poobah of technology, for seeing that all of these programs are accomplished in an efficient and easy way for you as the attendee to use and to be here, and that the message is able to be conveyed without any technical interruptions. That's all attributable to Glenn, and I assure you, we have our skill sets, Don, Mike, and I, but coordinating the technology is not one of those as well. So, Glenn's a big help. We appreciate his help. His patience with technology incompetence is well known and appreciated within our office. Finally, I want to thank all the Grossman, Yannick, and Ford professionals who have monitored these events over the last many months, but in particular, I want to thank my partner, Don Johnston, and Senior Tax Manager Mike Weber for all their hard work in keeping on top of professional developments, legislative developments, and the FAQs that have been issued by the SBA in coordination with Treasury. Without all of us being on this almost all the time, we would not be able to present the programs to the level that we have. Today, because of the governor's order, we are in 3 different conference rooms in our Pittsburgh office. So the technology challenge is greater than ever, and I'm sure Glenn was happy to hear that we were going to be working in 3 different rooms at one time. But he has everything set up. It seems to be in good order, and so hopefully we'll be able to convey the information as we have in the past without any interruptions. We ask that you please remember that we're interpreting the developments and trying to bring them to you in an informative manner. We didn't write the laws. We don't issue the FAQs. So if you see any of us on the street, we'd ask that you try not to run over us because it's really not our fault. Today, we're happy to have back with us a special guest, Dr. Kelly A. Hunt, who is the District Director of the SBA's Pittsburgh District Office. She joined us early in the summer at our first webinar, and the reception of having her on the phone was fantastic, and she's kind enough to spend a little time with us today. I'm going to turn it over to Dawn now, let Dawn introduce Kelly, and we're going to work with Kelly to get some more information for all of you through a kind of a question and answer format in the next few minutes. So Dawn, I'll let you take over and get to introduce Dr. Hunt.
Thank you, Bob. Thank you for the introduction. And Bob, there you go. Thank you so much. And like Bob said, we're coming from 3 different conference rooms, so we'll try as best we can to keep up with the slides. But very special welcome to Dr. Kelly Hunt. Dr. Hunt is the District Director of the Small Business Administration in the Pittsburgh District Office. As Bob said, we had her at our first PPP webinar in May, and she was able to help us out. And she was able to come and join us again for this webinar. Her time is very short, so we wanted to put her at the beginning, talk to her, ask her some questions, and just go from there. Just a little bit of a background. Dr. Hunt is an Air Force veteran who served 10 years active duty in the Air Force. She's the parent to 3 grown children and grandparent to 7 granddaughters. You look at her, she looks like she's 27 years old, and she's a grandmother with 7 granddaughters. So first we want to thank Dr. Hunt for her service to the country. We all greatly appreciate it. Thank you for that. Second, thank you for joining us again for another webinar. It's been an unbelievably complex year for the SBA, and being the Pittsburgh District Office Director, I'm sure it's been a complete crazy ride for you. So, first off, welcome, and tell us a little bit about 2020 and what's going down at the SBA and how you're dealing with 2020, Kelly.
Well, I will tell you that 2020 started off well. Everything was going good in January and February, it seemed anyway. From there it's been, a year like no other. And I know that we all get that. So for the SBA, we've had, I've been with the SBA about 6.5 years, and the administrators that we've had in my tenure under, both Republican and Democratic presidents have always said that the SBA was the best kept secret in the federal government because we're a very small agency compared to other agencies. We have just a fraction of the number of employees, and just a small agency. Not many people knew that we even existed. And so just to give you an idea, in the Western Pennsylvania area, we cover 27 counties. I have 9 people, 9 FTEs to cover 27 counties, and that's for SBA lending, counseling, exporting, government contracting, which is a very large part of what we do. And so, it's just not a big agency. And then when the coronavirus hit and the first CARES Act was passed, that changed everything for the SBA. And it took this little unknown federal agency into an area where we were putting together programming in, a week to start getting money out there. And, I'm a real honest person, and I know that, not everything went as smoothly as we would have liked to have seen, but when you're creating new programs for hundreds of billions of dollars, and there's such a need out there in trying to get that money out there as quickly as possible, things happened, and some things didn't work the way that initially we thought it would. So as we are now at the end of 2020, looking at 2021 and looking at the prospect of seeing a new stimulus passed as early as tomorrow I feel that the agency is in a much better position to navigate than we were 9 or 10 months ago. So, it's been busy. We've worked a lot. I have to say, in my career from the military, in higher ed and then in government service again, I've never experienced anything like this year. So, the people, myself and the people that work at the SBA, we're passionate about small business. My husband is a small business owner. My dad's a small business owner. These are our families, our community, our friends. We are so passionate about that. And, so we do this because we care so much about business, and we care so much about these small business owners and the families and the communities that they represent. And so we take this personal, we really try our hardest to meet the needs of the businesses. And like was said on the earlier introduction, I'm not a Congress member. I don't write the laws, but I am here to help to implement them the best that we can. And so, that's where we're sitting now, now that we're at the end of the year, in a much better position, I believe, to enact some change. And hopefully Congress comes up with a good idea here and something that is really going to help businesses long term.
So Dr. Hunt, a follow-up question to what you just said, and you led me right into the question. So obviously, we've got a lot of clients and contacts on the phone. A lot of them have received PPP loans, and many of them are just in the process of completing the loan forgiveness application form. Any hints that you can throw out there to them to tell them, hey, this is what you should do, and this is what you shouldn't do when they're doing their application?
Well, I'll tell you what I know. And, I will tell you that it is the goal of the SBA to approve those forgiveness applications. And I think that, when we look at the government and, most people have that negative view of the government, and thinking that, they're going to scrutinize everything because they don't want to give me this money. They don't want to forgive this money. But from the viewpoint of the SBA, that couldn't be more false. We are really out there. The SBA wants to be able to forgive these loans. So I think that when you go into the forgiveness stage of the loan and you look at it from that viewpoint, in that we want to do that, we have to be frugal. We have to be make sure that we are doing our due diligence when it comes to taxpayer dollars. These are the people on the call here today. This is your money. This is the money that you paid in on taxes, and we want to make sure that it got out and it was spent appropriately so that we can forgive the loan. So, there was a lot of people holding out in the beginning, and some lenders are actually still holding out and not accepting loan applications yet, in hopes of something like maybe that $50,000 limit for that simple application would be increased. I have not heard any rumors to anything being changed to those different applications that we have right now. So I would tell you that if you're out there and you're probably not at the end of the 24 weeks yet, but if you're ready to start getting ready to apply, I think it's a safe time to do that. I don't see in anything that I have dug up yet anything that makes me think that this new stimulus package is going to just say we're going to wave a wand and wipe the loans clean. I think that these different applications, and there are quite a few of them out there depending on your circumstances. The easy application, the simple application, the one with the S, for people that have loans under 50,000, and then there's an easy application if you meet some questions that you can answer, and then there's the traditional long application. But I don't think that we're going to see much changes to those. Again, I could be wrong. I don't sit with Congress and hear what they're talking about, but it looks like those are pretty much in place. Just to give you an idea though about what that process is looking like, I had a conversation earlier this week with a very small community bank that operates down in Western Pennsylvania, down in the corner here. And they had submitted 118 loan forgiveness applications to the SBA. And just so everybody understands, the lender will, the borrower will submit the paperwork to their lender. The lender will review that. They will scrutinize that. They will go over everything. And then the lender will make a recommendation to approve or to decline that application. So the SBA is not making that initial determination. That is made by your lender. So this was 108 loan applications that the lender had already reviewed and felt that they met the qualifications for to be forgiven. Those 118 loan applications were sent by the lender to the SBA, and all 118 applications were forgiven by the SBA. So, it's not going to be something where, 75, 90%, 50% of these applications are being kicked back by the SBA. If the lender who is working with the borrower to get that application, where it needs to be, for the most part, those applications, if they're, sent from the borrower with a recommendation to approve, they're going to be approved. So, that's kind of my biggest takeaway is for businesses to know, for applicants to know that, we're on the side of them. We want these applications to be forgiven, and we're going to help to do everything we can to do that. So I think that, that's really important for them to know that.
That's really good advice, and I appreciate that. I've been telling my clients who are going through the application process, I've been telling them that, work with the bank, because the bank is the first line is going to review and make sure you're talking to them.
That's
if you have
correct.
any questions during the process, go to the bank, say, hey, should I do it this way or this way? And listen to what the bank is telling you, because ultimately the bank gives a recommendation to the SBA. And like you said, if the bank says yes and it's under $2 million, it sounds like it's an SBA rubber stamp.
Well, I'm definitely not going to go on record of saying that.
Understood.
Right. But the chance of it being audited would be much smaller. With the smaller loans, now anything over 2 million, we know that they're going to be audited. But under 2 million, it would just be. I want to say too here, and I think this will kind of help make this more understandable. So there is a human touch on every one of these applications when they get to the SBA. So it's not just that, the bank is going to submit them in this large file and they're going to go in and a computer is going to see approved and then the SBA is just going to generate an approval. There is a human touch on every single application. Right now we have loan service centers because, we do disaster loans, and right now is a busy year for disasters in America. We've had quite a few hurricanes and we have a lot of wildfires and everything. So we're doing loan processing year round all the time because of disasters. But our disaster loan service centers and then our Little Rock Service Center and our Fresno Center that do our 504s and our 7A loans, they are all required, the employees of those centers are required to do a 30-day rotation to the disaster center to get these applications done. So we have put a lot of employees into this. So each one of those forgiveness applications will get a human touch on them. So if somebody does see something, they may request more information or they may go back to the lender for information. But in the most part, the majority of them are just being approved because the bank has done the work that they were supposed to do.
So you did mention, Kelly, the loans over 2 million will be audited. Many of our clients who are over the $2 million have received a loan necessity form not that long ago, and they have a 10-day turnaround. So can you talk a little bit about that? I mean, we've heard that, I know a lot of folks and a lot of the AICPA is trying to get that pulled out, to get that eliminated. Any insight on that loan necessity form?
Yeah, like I had mentioned earlier when I was talking about, how these programs were developed, one of the hardest things about this was that we were creating programs as the programs were already running. And I think that is a very hard place to be. And if I put myself in the place of a borrower, you know, when you borrowed the money, the rules said one thing, and it wasn't that the rules necessarily changed, but they were still evolving, right? We were still trying to figure out how we were going to approve the loans and how we were going to, you know, make sure due diligence was done on these. And that loan necessity form came out of that. So it wasn't necessarily in existence in the initial interim final rules or the IFRs that came out, but it was developed. So there are two different loan necessity forms, one for for-profit businesses and one for nonprofits. You know, the FAQs, which kind of govern, we didn't have, you know, the FAQs were updated all along by Treasury and the SBA, and they govern and provide the guidelines for the PPP program. They did, you know, we knew in those FAQs that loans over $2 million would be scrutinized in some additional way, you know, or would be audited in some way. So we knew that that was coming, and that was done through this loan necessity form. I have not heard anything that would lead me to believe that that will be removed or changed or anything. You know, the purpose of that really is that to show that the business had economic need, you know, and so you go into that knowing that what you're showing is you're not showing that you didn't make money, but you're showing that the fact that you did have an economic need for that loan. And that was one of the criteria all along of getting the PPP. And so, you know, I don't believe it's going to go away. You know, I haven't seen anything that led me to believe in, you know, in this new passing of a stimulus that, you know, while we're looking at maybe $300 billion additional dollars going to PPP, and then that program reopening with about $300 billion that we already had. So we're looking at about $600 billion that would still be in there. You know, that loan form would be changed. So, you know, I would tell people to start working on it, you know, and work with their lender. Like you had mentioned, that's going to be vital, because you're going to convince that lender that you needed the money and then that you spent it as you were supposed to.
Kelly, does the lender review that loan necessity form? Are they just a pass-through or a conduit and it just goes straight to the SBA? I thought that the lender was not necessarily on the hook to review that.
Right.
Is that correct?
Yes, I believe you're correct on that goes to the SBA, but I'm saying if they can work with their lender, you know, like if they have questions about how to report something on there, you know, talk to their lender, because it's going to coincide with their forgiveness application. And so, you know, you want to make sure that everything is in line, everything is right, working with their accountants, you know, with their CPA or their attorneys to make sure that that form is filled out correctly, because that will help them to, you know, really get through the process. We have found in, even with our EIDL programs, I know we're not talking about the economic injury disaster loan. That's a loan that I've worked with a lot more closely than the PPP. Once you get into that cycle where you've been declined the first time and you want to be reconsidered, it's like you're stuck in a loop, you know, and it's very hard to get out of that loop. So I'm assuming that it's going to be something the same with that loan necessity. If at all possible, you really want to put the time into making sure that you're answering the questions correctly the first time, so that it gets approved the first time, so that you're not getting stuck in this reconsideration loop where you're having to keep, you know, coming back with more answers.
And one more question on loan.
Can I ask a follow-up on that, Dawn?
Go ahead. Yeah, go ahead, Bob.
Yeah, I'm sorry to interrupt you. I'm sorry to interrupt, Doctor.
No, it's okay.
With respect to that loan necessity form, the questionnaire, there's been a lot of discussion about the limitation on the availability for inputting information that is integral to the decision process. And the FAQ notes that ultimately, if the SBA decides that they need more information, they may ask for that. But there's nowhere for the individual borrower to put that information in that they think is salient to consideration of the forgiveness issue or not. So the problem that we're hearing a great deal of is that, you know, even the open questions on the questionnaires have 1,000 characters. And somebody that borrowed a $3.2 million PPP loan is running a very sophisticated business if they were able to get, if they have that much payroll that qualified for a loan that size. I was wondering if there was any discussion or at least modification that there could be supplemental information to the questionnaire submitted to build the case. And there's a lot of circumstances which I won't get into right now, but clearly there could be issues, based on the format of the form, the way the questions are formulated on the form, and people that did not have an immediate effect in the second quarter, for example, of 2020 from the pandemic,
Right.
but will in the third quarter,
But will
fourth quarter,
later.
and into 2020. Yes.
Yeah, that is a great question, and it is a concern that we have heard. At least at my level, I've heard, and I'm sure that somebody in headquarters has as well. I will personally bring that up to my regional administrator to make sure that they understand that, the boots on the ground are saying that this is going to be an issue, because you cannot capture the full picture by just answering the questions on the form. And so I will bring that up. I have not heard any discussion about adding to it or allowing additional documents to be uploaded. But I will make sure that it is included, in what I report. That
Okay.
is of concern. But yeah, unfortunately, I haven't heard that there are any changes going to be made.
Okay. The other question I wanted to ask you, and you alluded to it a little bit earlier in your comments, was that once you find yourself in the request for reconsideration circle, that it's difficult to get out. Could you explain briefly for our attendees today, and actually for mine and Dawn and Mike's edification as well, what is the appeal opportunity here, and how does that process work, and what is the statute of limitations for the audit? If you could explain the SBA's rules with respect to those.
Right. If you're talking about the PPP loan there,
Right.
when I was referring to that, when I was talking about the EIDL, and I'm just hoping that it's not similar. I don't think that a lot of that has been put together yet. No, there will be a recourse. So I can tell you that, even if you, somebody with a more than $2 million PPP applies for forgiveness, they're declined, they will have the opportunity to have that reconsidered by submitting a different additional information. What that platform will look like, I don't know that yet. If that's going to be if that's one-on-one, I will ask that question though, and see if I can get something back to you guys on that for an answer, because in nothing that we've been sent so far provides us with a look at that. And the reason for that is a lot of times, I'm a field office, so I'm out here in Western Pennsylvania, and these are run by with the PPP, it's the Office of Capital Access in our headquarters, and then the EIDL loan is run by our disaster center. And so those are more internal functions that they're doing. But let me ask around and try to get an answer for that, what that formally looks like for reconsiderations for the forgiveness. I will check on that.
I appreciate that. And I have one final question before Don takes his final question.
Okay.
It's repeated through FAQ 46 and 53 that the loans over $2 million are going to be looked at, are going to be examined, and you mentioned that. But it also alludes to this language in there, others will be looked at as well as appropriate. So other loans as appropriate. And I wonder if you could shed any light for our attendees on what might make another loan under $2 million appropriate for review. And I assume that review does not concern in any way the necessity certification, because that is a safe harbor.
Right, exactly. Now, that is referring to, as I had mentioned earlier, that when Don had used, are they going to be rubber stamped? And I said, no, there will be human touch on all applications. So it could be something that person who is just reviewing something, maybe they see something that stands out to them, that they would want more information on. So that would be one way. Another way is something that I haven't talked about on this call, and that is the massive number of Inspector General complaints that the SBA has received. by employees. If you know, for the small businesses on the line, believe me, your employees are watching everything you do, and we have had an amazing amount of employees who have called to report their employer for not following some part of the PPP. And so, you know, those kinds of things I would assume are going to be taken into consideration. Like, you know, if somebody did file something with the Inspector General to say that, you know, you're saying that you kept your employees on payroll, however, you didn't keep them on payroll, or you are saying that you didn't decline their salaries by more than 25%, but maybe you did. And so those are issues that people are reporting on. There's also a lot of fraud out there. So, you know, that probably doesn't surprise anybody on the call, but we've had everything from identity theft, where people are literally stealing the identity and applying for a PPP and an EIDL loan. Both we've seen this happen in. And then we've had, you know, different things like that, where somebody in the company applies for the PPP, but it maybe wasn't somebody who had the authority to apply. And so, you know, somewhere down the line, maybe things like that could be reconciled, where you know, if there was an issue that was brought to the attention, maybe through the Inspector General or something, that would coincide with that review process and make somebody take another look at an application. So those are, you know, some of the things that I'm thinking, you know, in addition to that human touch, that person looking at it before that final approval is granted, that some of those other issues could come into play.
Wow, that's interesting. Thank you. Don?
Yeah, Kelly, Dr. Hunt, I want to be respectful of your time. I know you need to be out of here. I'm going to ask one more question. We're all hearing that potential new stimulus is coming out this week, and there's a big chunk of that which would be new PPP. From a timing point of view, can you give us any guesstimates? I mean, how long would it take for SBA to start rolling out money under the new plan?
Sure.
And I know that you're guessing at this answer, but what do you think?
Well, here's what I think. So they have tied the stimulus package to the federal budget now. And so if there is nothing passed by tomorrow, I will be furloughed because I am a non-essential employee. All of our field office is, and most of the SBA is. And we will all be furloughed and will be off of work until a budget is passed, because our funding for salaries does come from the federal budget. So that is still, you know, being reviewed and fought out. I've heard that there are a couple different issues that are of big contention in there that they're not, that, you know, both sides aren't coming to agreement on. Now, keep in mind, we currently have probably around $300 billion sitting in PPP that has been sitting there since August, when the program closed. So when the program closed, we had about $250 billion in there. And then we had some money returned from people who decided, like, oh, I don't think that I'm going to be able to pass this muster to, you know, keep this money, so I'm just going to give it back. And so that gave us even more money in there. So that money's been sitting in PPP since August. All we needed was Congress to say, yes, open it back up. The president would have signed it, and we could have had PPP back running, you know, 4 months ago. So now, as we look at it, you know, if it is passed, say we do get a budget passed this Friday, what's that going to mean to PPP? Well, it's going to be dependent on the fact if what is passed is to reopen the current program as is, then there will be, you know, we'll need to make some changes to some IFRs, you know, changing some dates and, you know, making some changes to things like that. But those are all minor things that could be done relatively quickly. And so, you know, we could be up, lenders could be taking applications for a second round of PPP, you know, quickly. We've heard that PPP would be limited to in businesses with less than 300 employees. That's been a rumor, but we would have to wait to see what actually gets passed and what the president signs. If something is passed that makes large changes to the PPP program. That would take much longer to roll out because we would have to write some new rules. We would have to have new interim final rules. We might have to have a new application system. You know, new things would have to be done, and that would push the rollout of the PPP phase 2 until probably sometime in January. Another thing to keep in mind with that. So my short answer is it depends on what's passed, right? It depends on if it's what we have and just reopening, or if something new is or significantly changed. Going into that, also we have to consider that the election is over. It appears that we are going to have a change in our administration. We will have a new president coming in, which means that all of the presidential appointees in our federal government will also have to resign by mid-January. So the night before the election, every political appointee has to resign, right? Because they serve at the pleasure of the president. And so the new president will bring all new federal employees in that line, the presidential appointees. I am like the last line of career employees, and then like my bosses are all fall under that presidential appointees. In the SBA, all of our policy positions are filled by presidential appointees. So all of the people that write the IFRs, that are writing all the rules for the PPP, that requires a lot of changes. At the same time, we're losing all of the people in our agency who wrote all of the IFRs and the rules and the framework for these programs. And we have a new president being sworn in, who then has to hire new people to do that, including an SBA administrator, and then all of her team down to the associate administrator levels at the SBA. That could cause some issue in getting this rolled out as quickly as people would like.
You know what? That was very helpful. That was very helpful. I didn't even think about stuff like that. So in closing, I know you have places to get to. First off,
no, I'm good.
If you are furloughed on Friday, I will hire you. You can start with us on Monday.
I will be there.
You have a position, Dr. Hunt.
Thank you.
Again, thank you so much, Dr. Hunt.
Yes.
I cannot tell you how much we appreciate you jumping on this call with us on such short notice. And we wish you the best over the holidays, and keep your head above water. I know it's difficult.
Thank you. And I do want to remind people that if you have not received an EIDL loan, the Economic Injury Disaster Loan, that loan program is open until the 31st of December. We're still taking applications. We still have a lot of money in that. That's a low interest loan, 3.75% over 30 years. If you need a little bit of working capital, that's a great loan. And that's open for just a few more weeks. So go and apply.
And you have to use that loan for payroll and business related costs, correct?
There's no real it's not like PPP where it has rules like that. It has to be used for the business, but if you need it for working capital, you can use it for that. You can use it to pay your lease or your mortgage. You can pay for equipment. You can pay salaries. It's much broader because it is a loan. It does have to be repaid, but like I said, it's a 3.75% on for for-profits, 2.75 on nonprofits, and it's a 30-year note. So you're talking about pretty low, payments at a decently low interest rate when it comes to a business loan.
Perfect. Hey, Dr. Hunt.
Okay. Call me Kelly. Please don't call me that. But yes.
Well, back in high school, I could have called you Kelly. It's Dr. Hunt now.
For everybody on the call, we're very old friends, and he only says that I look young because he graduated a year before me. We went to the same single A school district out in the country, and and he's a year older than me. So,
Thanks
but
for pointing that out.
it was great to be with you guys today. And
Thank you, Dr. Hunt.
anything you need, please just drop me an email. Okay.
Thank you.
Dr.
Have
Hunt.
a wonderful
Thank you, Dr. Hunt.
Christmas.
We do
Happy
appreciate it.
holidays.
You
Thanks.
too.
Bye.
The presenters for the balance of today's program is obviously myself, my partner Don Johnston. He's the old-looking guy in the middle that doesn't look as good as Dr. Hunt, and then Mike on the right. So I am on the left. So if you see the three of us, aim for those two on the right. Thank you. This slide just basically refers you back to our coronavirus resource center. We've been inputting articles. We have probably 50 or 60 different items on there that can be looked at, including recordings of earlier webinars that we've conducted on PPP loans. We really implore you to go to that website and to go to the Coronavirus Resource Center. If you have questions, I think most of them can be answered there. If not, then of course you can always contact one of the three of us, and we're more than happy to talk about it. I just want to speed up a little bit to make up a little bit of the time. What I have to share is not as important as what Dr. Hunt had to share, at least initially. And so I want to just touch on a few things real quickly. I mean, where are we now?
Hey, Bob, I'm gonna interrupt you really quickly here in an effort also to stay on time. Do you mind if I fire off a poll first before you get going?
No, please, go ahead.
All right, everybody, we're a little out of order here, so just kind of follow my lead. The first poll we're gonna start with is gonna appear on your screen here in a second.
Okay, so I'm just going to give a little bit of a recap where we're at before we get started in earnest. Basically, loan forgiveness is associated with Section 1106 of the CARES Act. 1102 was the provision within that law that authorized the PPP program in the first place. And now we find ourselves on the other end of the program with the closure of the initial programs on August 8th, I believe it was. So now we have a number of questions that continue to come in on a daily basis with respect to this forgiveness application and the protocols and procedures that need to be there to get there. But my math doesn't actually reconcile to Dr. Hunt's, but what we know, or what we think we know, is that the first round of PPP loans coming through on the CARES Act on March 27th was $350 billion. What was problematic in that bill, excuse me, was the limited requirements to get that money. And that's where that loan necessity questionnaire kind of grows out of, and Dawn and the three of us will talk about that more later in the program. What happened in that first round, $350 billion, it was used up very quickly within a matter of weeks, with a lot of very large companies and larger companies participating. There was an average loan size there of about $200,000 each. More than half of the program loans in excess of $1 million, which was 45% of the money, went to just 4% of the overall applicants. So that's an issue that was bothersome to SBA. You know, obviously the whole impetus of the program was to support smaller privately held companies. And so everybody remembers some of that news that flashed about at that time that showed that. There were a lot of loans for smaller companies approved. I mean, there were 1.2 million loans in that first round for 150,000 or less. Nevertheless, you know, too much of the money was presumed by Congress and the SBA to have gone to larger companies, and that's what they were concerned about. So by the time they had the second round of PPP loans, which was a month later on April 27th, Congress authorized another $310 billion, which brought the total amount that was available for lending to borrowers within the small business community is $660 billion. The second round loans, because a lot of the larger companies had already been in front and serviced those, and Dawn and I often talk about that I think some of the lenders focused on their bigger and, in their minds, more profitable clients than small businesses first. That's what led to that kind of a phenomenon. But the second round, there was less of that, and the loan values dropped from an average of $200,000 to $120,000, and the demand ultimately completely dribbled out until there was available funds left, as Dr. Hunt said. If you look at the August 8th, 2020 SBA PPP loan report, which they were putting out on a weekly basis, they had made, by that time, the date that the program ended, 5.2 million loans with total loan proceeds of 525 billion. So subtracting that 525 from the 660 that was authorized, you could see that there's a 135 billion that went unused. Now, I think Dr. Hunt felt those numbers were a little bit higher, and they certainly could be. I would not want to say that these are audited numbers. This is just what I found on my limited research. But that 135 billion is there, and that will be part of this new program in this Emergency Coronavirus Relief Act of 2020. At least that's the name of the Senate bill at this time. There's a section within that bill continuing the Paycheck Protection Program, and there's $300 billion being allocated to that. You know, our presumption is that, and in our general reading, it's hard to get facts on developing legislation, especially as crazy as the media is over the stimulus. But what we're seeing is that the 135 billion that went unused before, whatever remained unused before, continuing PPP program to know if that 135 is going to be on top of that 300 billion. We think it's more likely that it will be used to finance part of the 300 billion that's being allocated to the new legislation. And we'll talk about this legislation a little bit later. Essentially, this new program is going to be a little bit different. It expands the non-payroll cost, the covered non-payroll cost definition somewhat to make it easier for smaller businesses to qualify for proper expenditures. It tightens up eligibility by looking at quarter-over-quarter profit from 2020 to a prior year, and that's a detail we could talk about if somebody has a question, but again, we don't have the absolute specifics on that. The bill also does address the tax deduction issue, which we will discuss later as well. So both important items. I seem to be stuck here. Let me see if I can, there we go. There are still a number of issues requiring clarification for borrowers and applicants for loan forgiveness. You know, every single day, Mike Weber comes into my office and brutalizes me with another scenario that's not so clear and understood. So when we're reading this stuff every day, we're noting things that are still unanswered, and even though we're in the process and the throes of applying for loan forgiveness on most fronts as well. Most of the guidance that we have is the frequently asked questions. I think the SBA has done a superior job of trying to get the guidance out as quickly as they could in conjunction with developments as they've arisen. As Dr. Hunt alluded to, it's not easy to write the rules after the program is put in place, but they've done a fairly reasonable job, we think, and probably better than we've ever seen through the Internal Revenue Service, which struggles to get guidance out from time to time. And obviously, there's still holes. We know that. The latest FAQs, General PPP Loan FAQs, which includes some of the topics we're going to talk about today, is dated December 9th, just a week ago, and is available on the website that you can see at this link. There's additional guidance that will still continue to be coming out, we're sure. You can see the updated versions of the program rules and so forth are going to be available at the Treasury website as well as the SBA website that you can get to as well. In addition, there's some more recent guidance that has come out of the SBA and Treasury. The first one is Revenue Ruling 2020-27, and we'll talk about that a little bit later, which doubles down on the IRS's earlier position that ultimately the expenses paid with the PPP loan proceeds would not be deductible. And then Revenue Procedure 2020-51 kind of tells you what you do if the loan isn't forgiven in that instance. We'll talk about those at the end when we talk about tax matters. And then this FAQ 53, earlier in November 3rd, these loan necessity questionnaires, and if you have a loan smaller than $2 million and you're on the call, you probably haven't been paying too much attention to this, but for larger borrowers, Their loans are absolutely going to be audited, and so they've issued this loan necessity questionnaire, which Dawn is going to address later on in today's program. But there were a lot of holes in the information with that initial announcement, and on December 9th, they added this FAQ 53, which is incredibly important, and we'll be talking about that as well today. So that's kind of the essence of where we are at this moment. We've already gone through the first polling question, so I'm going to turn it over to Mike, and he's going to talk a little bit about the loan forgiveness fundamentals and moving on from there. As Dawn mentioned earlier, you know, I'm driving the ship on slides, which might make this a little bit bumpier than before, so you may hear Mike or Dawn telling me to change the slide. I'll try to stick with them. Thanks, guys.
Hey, Mike, before you start, I'm going to fire off a second poll here. I know we just had one, but we are just going with it today. So give me 1 second here, and you can talk through it if you like, but I'm going to put the second one up so people can at least allow for a second poll.
Okay, thanks, Chris. Thanks, Bob. Of course, where we're at right now with a lot of our clients and contacts and such is they are at a different part in the process. Every one of them is in a little bit of a different part of the process in terms of applying for loan forgiveness. Just as an example, I have a client that applied for their PPP loan on the very last day. And of course, with the 24-week covered period, their 24 weeks doesn't end until next year, and then they have a period of time to apply. So we recognize that some people or some businesses have not even completed the 24 weeks. Some have already perhaps even submitted an application. Some are just realizing that they have to do something and trying to get their ducks in a row to submit something to the bank. I also want to address one thing in the Q&A where I'm getting or seeing several questions with respect to, you know, what if my bank is not accepting applications, or have I had any experience with a particular bank? What I will say about that is all of those are true, and all of those are experiences that I've had, and I'm sure Bob and Dawn have had as well. Certain banks are ready to go right now, and certain banks just, their portal is not set up and they're not taking applications at this time. Other banks, I've been told, or at least one in particular, is taking the applications, the forgiveness applications in the order that the funds were dispersed. So it's basically a first in, first out process. So you may have to, you know, be patient. They recognize that there are issues related to that, specifically with the problems on ownership change. So if you are in the midst of a transaction or transferring a certain percentage of ownership from, you know, one individual to another, you know, understand there's rules there, and if the bank is holding you up by virtue of not even allowing you to apply for forgiveness, that could in fact, you know, present a problem to you. So I just wanted to highlight that and answer a couple of those questions right at the beginning. We'll just move on to the next slide here, Bob. So right now, basically the general rule here is that the borrowers can apply for forgiveness, you know, anytime up to the maturity date of the loan. However, if you don't apply for forgiveness within 10 months after the last day of your covered period, then the loan payments are no longer deferred, and the borrowers will have to begin making loan payments to their PPP lender. So the example that I had for, again, one of my clients that got their money on the very last day, you know, their 24 weeks doesn't end until sometime in February, I believe, and then theoretically they have 10 months after that. So you could, you know, in the right circumstances, stretch this out all the way to the end of 2021. One of the questions we continue to get, even though it was addressed by the frequently asked questions, is there is a date listed on some of the application forms, and as to what relevance that date has, we don't specifically know, but the reality is that it's not controlling in any way, and we do have the answer posted on the next slide there, Bob, that the borrowers may submit a loan forgiveness application anytime before the maturity date of the loan, which is either 2 or 5 years from loan origination. Right now, again, one of the questions we're getting, well, first and foremost is, you know, gathering information to put it on the application, but also taking a step back, trying to figure out which application should I even be subjected to, and which one should I be filling out? Because as you'll see, there's varying degrees of information that are required to be placed upon which particular form you're filling out. Of course, we have the long version, the 3508, the easy version, and then the streamlined version. I have to be honest, the long version, at this point, I may have seen one client that has filled the long version out. And if you're reducing wages by a certain percentage, 25%, if you have a reduction in your full-time equivalency, which we'll touch on that a little bit later, and I'm sure if you're following this to any degree, you vaguely understand some of these topics. But if you find yourself in that situation, you do have to use the long form, which requires you to substantiate and produce a lot more information than if you were to use the easy form. And so before you even sit down and think about which one I should fill out, try to understand whether you're subject to the easy form. And if you are, trust me, and this is where most of our clients are landing, fill out the easy form. Most of our clients are landing here, and I have to tell you that this is a much simpler process and much easier application to fill out. And basically, you qualify to use this form if you're, as listed here, a self-employed individual, independent contractor, or sole proprietor who had no employees, or you didn't reduce the annual salary or hourly wages of any employee by more than 25%, and you didn't reduce the number of employees that you had, or depending on how you want to look at it, you didn't reduce your annual salary or hourly wages of any of your employees by more than 25%, and you had some limitation on how you were supposed to operate by virtue of guidelines as issued by the Secretary of Health and Human Services, the Director of the CDC or OSHA, et cetera. So, if you qualify for any one of those reasons, be it points 1, 2, or 3 there, the reality is you can use the easy form. And trust me, if you can use the easy form, you should be using the easy form. It's a lot easier. It's a lot easier to use. The 3508S form is for loans that were originally valued at $50,000 or less. Basically, if you have that loan, you essentially just have to make a couple affirmations to the lender, submit the application, sign it, and that's it. There's no substantiation required. Now, we're going to talk about some various topics with respect to the latest proposed legislation that's out there. But what we have seen so far is that they may move that $50,000 line up to $150,000. It all depends on what gets passed, has been highlighted by Dr. Hunt on this presentation earlier. But if that line gets moved to 150,000, presumably that 3508S form could be obsolete and no longer needed.
Yeah, Mike, if I might add, I think moving it from 50 to 150, I had thought that the legislation said if it's 150 or less, there'll be no application process whatsoever.
That's right. It will just be automatically forgiven. So the form just, I guess, wouldn't even need to exist. And if your loan was 150 or less, you just, I think, essentially would have to do nothing. We'll have to see what the guidance suggests there, but you basically just automatically are forgiven. I don't know if you just have to have like a one-page form or something you would have to sign, something like that. But the reality is that if they move that line up, it's going to benefit a lot more borrowers with respect to what they need to substantiate.
Yeah, I think you're right on that for sure.
What we're seeing right now, though, is that some lenders are in fact set up to take the applications. We know and we recognize that, and we have gone through the process with some of our clients. However, what we are seeing is that you don't manually fill out this form, although that is a good thing to do on the front end so that you recognize what you want the form to look like. You're actually prompted by the lender software to answer questions and submit information in a particular manner, and then they will decide, you know, which form you need to be filling out based upon how you answer those questions. So I think it's good to understand what you want the form to look like on the front end, but recognize it's not just as simple as just keying in the information and uploading it to some of the banks. Some other smaller banks are in fact just taking essentially paper versions of the application form, and that's it. The larger banks, of course, have some automated process where you really have to think through how you're answering some of these items.
Thank you, Mike. We're going to talk a little bit about, you know, the loan forgiveness protocol. I mean, what Mike discussed obviously is the starting point for the loan forgiveness process. First is when, second is, you know, how and what forms. And now we're going to get into a little bit of the protocol discussion specifically so that you know what we have. Most of the information on these coming slides comes from the SBA website, just so you have some sense of where it came from. It's guidance that's offered therein so that you have an idea of what they're looking for. I think it's an important takeaway from Dr. Hunt's comments, and we have, Mike and Dawn and I have said this several times in our prior presentations, it is the SBA's motivation and goal to forgive these loans. So even though some of this may look a little bit overwhelming, the reality is you need to produce sufficiency of information to allow that lender to make that recommendation for forgiveness. And if you do a good faith effort at doing that, and you're careful to cross your T's and dot your I's, you're probably not going to have a big problem, especially for loans under $2 million, if you had spent the loan proceeds appropriately in conjunction with the earlier rules. So the general four-step process that we're talking about here is obviously controlled by your lender. That's where the application process begins, as Mike noted. So you contact your PPP lender, you complete the appropriate form. And again, as Mike said, there's a lot of portals at the larger banks which will ask you a series of questions to make this process easier. And as you answer those questions, they'll automatically drop you to the most appropriate form or to the appropriate form for your situation. So that's the issue. So once you begin with the lender and contact them and get the process started, then you need to compile the proper documentation. We'll talk about that in a moment. You're going to submit that forgiveness form and documentation to your lender. Again, larger banks probably through a portal, smaller banks perhaps on the paper forms themselves. And then, you know, the next step is to continue to maintain communications with that lender so that you know ultimately where your loan forgiveness status is at any point in time, and you bring that out. Interestingly, we visited a fairly substantial client earlier in the week. The individual chief financial officer out there was able to file for their loan forgiveness on December 7th, and by December 14th, it was approved. So I think that merits a comment because, as Dr. Hunt said again, they're trying to move these through really quickly, and she had mentioned that the one lender with 118 loan submissions all approved. I think you're going to find this process, especially for smaller loans, to be a little more effective and efficient than perhaps you had hoped in the first place. The required documentation is the tricky thing. And so you have payroll documentation, and one of the questions that Mike, Dawn, and I continue to receive is what kind of payroll information, and will third-party ADP, paychecks, et cetera, information be sufficient to do that? And our answer is generally yes, as long as it reconciles to your covered period. So, you know, you have to provide all the payroll costs that overlapped with your covered period and or the alternative payroll covered period if you use the alternative period. And what they're talking about generally on the SBA website is bank account statements, third-party payroll service provider reports, ADP, paychecks, of course, showing cash compensation, the tax forms that back those payroll records up. Usually that's going to be your 941s that you're filing on a quarterly basis to report your payroll taxes, perhaps some state quarterly unemployment tax reports and withholding reports as well. and then payment receipts, canceled checks, or account statements documenting the amount of the employer contributions to your health insurance and retirement plans that was included, that's going to be included in the consideration for forgiveness. Those were all qualifying expenditures at the front of the CARES Act under 1102 as initial FAQs came out and they defined payroll. So really what you're looking at is just backing up what the definition originally had said and trying to make the information that's being submitted tied to the documentation that you're able to obtain. Interestingly, we're finding that some parties are requesting different information or not as much information. So that's going to be lender sensitive, and I think Mike mentioned that earlier in his comments, or Don. So we're seeing something that varies slightly from employer to employer, from lender to lender, but it gives you that kind of sense of what they're looking for if you read that listing for payroll. Then of course,
hey Bob, can I make a
absolutely, Don, please.
Sorry to interrupt you.
No, it's okay.
I just wanted to comment. Like Bob said, some lenders are asking for different stuff. It's not completely consistent. And one of the reasons may be because some of these lenders have outsourced this work, i.e. they may have hired an accounting firm to do all of the reviews for the bank. Because obviously the banks are completely overloaded. They've got a lot going on with PPP. And to add on reviewing 1,000 applications within a 3-month period is virtually impossible. So we do know for sure that some of the larger banks in Pittsburgh, we know for sure that they have outsourced that work. So that may be why you're getting different questions, because instead of the bank reviewing it, you have an accounting firm, a CPA firm who is contracted with that bank to review all those applications.
Thanks, Don. Appreciate it. The non-payroll documentation is somewhat similar in the sense that obviously it's just root fundamental information that you need to justify the expenditures that you're saying you paid with the PPP loan proceeds. So when you're talking about the non-payroll expenses, some of the examples include, business mortgage interest payments. For those, you need the lender amortization schedule and receipts verifying payments, or a lender account statements. For rent, a current copy of the lease agreement, which seems a little onerous over the top, and receipts or canceled checks verifying that you made the eligible rental payments in conjunction with those lease agreements. And then for utility payments that were allowable under the original act, copies of invoices, canceled checks, or account statements. So I mean, that's just logical stuff, right? And I think most of the people on the phone on the call today will appreciate that that's information that they have available. It's just a matter of compiling that data in a way that complies with your lender's requirements and what they want to see, and making their decision, again, to submit your application to the SBA with a recommendation to forgive. So that is taken from the SBA website, those 2 slides, as we said. It's noted in the website that this list may not be all inclusive, so you may see things beyond what is on their website. We do note that you can use scanned documents and e-signatures and so forth. There was some question on that early on, and PPP forgiveness FAQ. There is, for people on the call, there's 2 different questionnaires or 2 different lists of FAQs. One is the PPP forgiveness FAQs, and the other is the PPP, I don't know, for want of a better word, general FAQs. So on the forgiveness FAQ, which can be sourced right here, dated October 13th, you can use electronic information and submissions to get to that level. The other thing I wanted to talk about before we get over there, and this is a question maybe Mike can chime in as well, is we seem to be getting a lot of calls about people who originally borrowed monies based on the rules in place, 8 weeks of compensation plus some utilities, so it ended up being 10 weeks of compensation. If you turned your covered period from the original 8 weeks and elected the 24-week covered period, or if ultimately you borrowed after the 24-week period was mandatory, you essentially have a lot more time to pay payroll than you had in your loan calculation. So originally you borrowed it pretty close. You had to spend it in about the time that you measured the loan. Here you had a lot of extra time, and so people have extra compensation, extra non-payroll expenses that qualify. And the question is, do they need to list all of those on the questionnaire, or do they need to just list enough to show that they've eaten up the proceeds of the loans? And if you have enough covered payroll, do you actually need to take the time to submit that you had these non-covered expenses? Because most of you will recall that there was an original 75-25 mandate splitting the proceed use between covered payroll and covered non-payroll expenses. That was later dropped to 60-40. And Mike, what's your thought on that requirement? Do you need to hold your payroll, for the whole 24 weeks, or can you just put in enough to use up the loan?
That's a great question, but before I answer that, Chris is telling me we got to prompt another poll question, so we'll put that up there.
Chris is getting in the way here.
Yeah.
Hey guys, I'm sorry. I'm just trying to keep us on track here. I know it's a little confusing, and I apologize to everyone on the line who is ferociously submitting questions in the chat and the Q&A. This is number 3, despite what the poll placeholder slides have said. So just follow on as best as you can. We're winging it at this point with the polls. So just try and follow along, and we understand we're out of order. But again, this is number 3, and we are going to try and fit a few more in here as you guys go along. So this has been your PSA.
Bob, that's a great question, and you're right. We do get that question a lot and all the time. What I would say about that though is we'll talk about this on a future slide here, but basically the more that you load in there, the more opportunity you have to obtain full forgiveness if there is an issue with your application. For example, since the original PPP loan value was based upon 2.5 times your average monthly payroll, the reality is, as Bob said, you've got 24 weeks to spend all this money. Even if we seem to think this way, that even if your FTE drops by a certain percentage, you've got additional costs in there to basically absorb that drop in FTE equivalency. So even if your FTE calculation was 0.95, the more costs that you load into the forgiveness application, the more latitude you would have to still obtain full forgiveness. In other words, you have basically 3 times as many costs during that 24 weeks than the original loan value. So in certain circumstances, I think it behooves people to load in as much as you can. If you're absolutely confident that you've got 100% forgiveness anyway, then maybe you don't need to spend the time on the utility payments and such. But we don't know specifically if you're going to get an opportunity to update that application if there is a problem with it, after the bank reviews it. I haven't seen that yet, Bob. I don't know if you have.
No, I haven't, Mike, but that's a good point. I mean, the fact of the matter is, all of these get a touch, right? These applications get touched by the lender and then somebody at the SBA. So the more cushion you put into there, as Mike said, I mean, especially obviously nobody is manipulating the data. There's just more that has been paid because you have an extended period. So our feeling is the more cushion you put in there, I think generally you're in a safer posture. Okay, the next aspect of this, obviously, once you have the filing dates, the forms, you've gathered up the information, is to evaluate your eligibility and then the timing of making the application itself. So that's pretty straightforward. I don't want to spend a great deal of time on this. We've talked about it several times, but the funds had to be spent for eligible payroll and then eligible non-payroll expenses, either through an 8-week or 24-week period. And we've talked about that at probably both of those previous seminars, so everybody's familiar with that. Once you have used up all of your loan proceeds, you can then apply. I mean, that's a question that we've gotten, and I don't know, Dawn or Mike, if you have anything to add to that. We've had numerous questions on whether you can apply throughout the period, or do you have to wait until the period's closed? And I do not recall seeing anything definitive that said you absolutely have to wait till the period's closed. We have suggested that only as a means for collecting 100% of your cost experience, your payroll and non-payroll costs that you incurred over the full 24 weeks. If you do something as soon as you hit the loan threshold, then again, you're eliminating some of that cushion that Michael and I were just talking about.
Yeah.
You have up, I'm sorry, Mike, go ahead.
That's a good point. Although what I would say, I have had some clients apply early, and you are permitted to do that. But kind of in conjunction with a lot of the Q&A that I'm seeing here is banks just aren't ready to take your application. So even if you wanted to apply early, you can't because of a bank limitation.
Yeah, you know, interestingly, I don't want to make a commentary on the banks, but I think, you know, there's out of these 5.5 million loans that have been made by the SBA, the banks got paid on the making of the loan, the granting of the loan, or the provision of the loan. They don't get any real additional money by servicing the forgiveness side on the other side. So I think some of the banks are certainly standing by and hoping for this $150,000 exclusion, which will then save them an incredible amount of paperwork. And for some reason, you know, I have a suspicion, I've heard other commentators saying that they're holding out for this legislation to see if that's the case. There is a cap on when you can apply, and that cap, as Michael alluded to earlier, is 10 months from the last day of your covered period. So if the covered period, of course, started on the date that you received the loan proceeds, and it ends 10 months after that covered period ends, after the last day of that covered period. So most of our clients, and I assume most of the people on the call today, have an extended period of time to make that application. And we're going to talk about the merits of making that application sooner than later in a bit. And the other side of that is, you know, do you make that application in conjunction with loans under and over $2 million because of that loan necessity questionnaire? And Don will address that as we get to that. There is one exception, or some exception. I keep running into a little bit of a sticky on these slides. There's one loan payment exception for timely application that says if you submit a timely loan application, that is within the 10 months, do you have to make any payments on your loan prior to the SBA remitting the forgiveness decision, if any, or the forgiveness amount? And the answer to that is no. As long as the borrower submits the loan forgiveness application within 10 months, the borrower is not required to make any payments until the forgiveness amount is determined by the SBA. So if you do it on your very last day, that's when the deferral period ends and you're supposed to start paying principal and interest back on the loan, albeit at a very small, very low interest rate. You don't have to worry about that as long as you have the application in until you hear back from the SBA. And then if you do find out that some of it's not forgiven, you know, there's adjustments within the answer to FAQ3 which allow you to, you know, defer the payments permanently for the amounts that are forgiven, of course, and then start making payments on the differences. The other eligibility requirements obviously are fairly straightforward. Michael has alluded to that, and we'll talk about it a little bit more when we go through the actual calculations, but, you know, 40% or less of the loan proceeds have to be spent on non-payroll costs. Employee headcount fundamentally is maintained, and the compensation levels for your employees haven't been modified by more than 25% downward. So if any of those factors aren't completely fulfilled, then of course you're going to have some portion of the loan that will not be forgiven and ultimately will have to be repaid over the terms of the agreement. So that's really the protocols and the process that's there. I'm going to turn it over to Mike a little bit. We're going to talk about the actual calculation. Though, Mike, we talked about how much time we might have. We may not get into this in the nth detail, but start to give you folks that are listening in an idea of how the computation of the forgiveness amount is going to be determined for making this application. Mike?
Yeah, Bob, if you could just advance to the slide that says polling question number 4, I'll talk about a few of the items on these slides. Of course, these are all available on our website, but essentially on these slides right here, these are just the definitional components, and, you know, recognize that you applied for the PPP loan based upon, you know, certain information, and you're using that same type of information to apply for forgiveness. So, you know, these are all the definitions. Again, this is the third or fourth webinar we've had on this particular topic. And so these items, you know, quite frankly, really haven't changed all that much from the very beginning. So, you know, again, you know, more information on our website, not really pertinent to today's conversation necessarily. There are much more relevant topics that we'll get to after we finish off polling question number 5. And I know we just finished number 4 right there. But Bob, on to the next slide there. Essentially, when you're calculating forgiveness, you just have to look at a couple different things. And again, these slides are on our website. Again, really haven't changed much, you know, recently. But effectively, what you need to look at is, are you reducing wages by more than 25% on any of your employees? And are you dropping your employee headcount? If you're not doing any one of those things, essentially, you're going to use the EZ form, and you're basically easily going to obtain the 100% forgiveness. If you're doing one of those things, there are much more, you know, rigid calculations that you need to do, again, outlined on these slides. Bob, just stop right there on that anomaly. This is the one thing, again, we alluded to before, and I just wanted to, again, talk about this. We think that since you have 24 weeks to spend this money, that you can actually, and per the instructions, the way the form's laid out, actually load in substantially more costs than your original loan amount. So if you had some limitation on the reduction for forgiveness, you would still have, you know, like almost 3 times as much cost loaded into the system. And if anybody's walked through that form, you could see how that exactly plays out. And I've gotten that question, and I believe at least in one circumstance, we submitted the application even with the bank's online software system, and it took it. So, you know, the banks don't make the regulations. We understand that. They're just kind of interpreting it just as much as we do. But, you know, that's our feeling on it at this point. So, you know, again, it goes back to do you want to load more costs in there or not? You know, again, we think it's pertinent that you do that. Just moving forward, just a couple of these other slides, you know, again, basically, if you're reducing wages, you do have to calculate that amount. And I do have the mechanical operation on here, and just time just doesn't allow us to get into the mechanics of the whole thing. But essentially, you know, there's a calculation out there. There are safe harbor provisions to restore people back to their original wage. If you do that by December 31st, you don't have to account for that in the forgiveness application process. So when I talk to people, I always start conceptually with just saying, hey, did you actually change anything from pre-coronavirus to during the coronavirus? If you just continued on your normal operations with the same people and never reduced anybody's wage, then quite frankly, all these slides right here, steps 1, 2, and 3, are not really relevant to you. You're just going to use the EZ form, load your costs in, and get the 100% forgiveness. So with that, I'll just catch us up and get us to polling question number 5. And Bob, I'll turn this back to you just for the matters of taxation. Although what I will say, just to preface this, is I would say this right now, this is the number one question I'm receiving is, how is this to be treated from a taxation standpoint?
Yeah, thank you, Mike. I think this is obviously a very important question from a corporate or business operating cash flow perspective. People received the loans back in early May or June. So you're in a company that borrowed a loan for $1 million, and you spent 100% of that loan proceeds in conjunction with that 60-40 rule. You spent $600,000 or $700,000 on qualified covered payroll expense, and the balance on qualified covered non-payroll expense, and met those requirements. So you're good to have that loan forgiven. And the fact of the matter is, you know, barring any unforeseen significant event, you would expect that you would get that approval from the SBA, and that $1 million would be refunded. or be forgiven. And that's the way we expected it to be from the beginning. Now, the CARES Act itself includes a provision that says that forgiveness will not be taxable. So that's good news as well, because generally under Code Section 61A of the Internal Revenue Code, debt forgiveness income, cancellation of indebtedness, is an economic gain to the recipient of that forgiveness, and they have to pick that up as taxable income unless they meet one of the exceptions in another code, Section 108. So that's a good outcome for borrowers. What happened shortly after that loan was given, or that provision within the CARES Act was passed and people started borrowing these monies, is that the IRS came out and they made a decision that in issuing notice 2020-32, that the expenses that are paid with that tax-free money, in other words, there would be the receipt of the forgiveness, are not deductible. So you're kind of in the same boat, right? They could have said the expenses are deductible and just let it go, but said we're not going to allow the, we're not going to allow the forgiveness itself to be tax-free. They couldn't do that because ultimately the legislation itself was authorized and passed by Congress and signed by the president. So that loan forgiveness and the non-taxability of that loan forgiveness was set in statute, in law. So they are on solid ground, the Internal Revenue Service. Their posture is that anytime you have tax-free income, the allowable deductions that are associated with that tax-free income are not deductible. And they depend on a certain code section in the Internal Revenue Code, which is valid and has been there for many years, Code Section 265, to back that posture up. So that's caused a great deal of consternation because our politicians in their infinite wisdom have all argued that that was never the intent of Congress, though there has been no proof that that was their intent. I think it was probably more of an oversight than anything else, and whether or not they wanted to do that. The issue that Dawn and Mike and I talk about regularly is the absolute cost of allowing these deductions that the IRS has ruled are not deductible. You don't see that talked about that much, and we'll talk about it a little bit more in a minute. There was a lot of issues that cropped out of that. One is if the forgiveness happens in 2021 because you haven't applied yet, do you take the deductions in 2020 that were associated with those proceeds? Because as of the last day of your tax year, you had those expenses accrued or actually physically paid by that point because your covered period has ended. And do you get those deductions in that tax year and then have to add them back in another tax year? There was a lot of calamity that kind of came about in conjunction with tax geeks like myself and Dawn and Mike talking about different worst case scenarios, how to treat this. And there was no particular guidance provided by IRS on the timing of that limitation on the deductibility of those expenses. Recently, November 18th, after Mike and I did the last CPE session on this, the IRS did issue some additional guidance where the IRS has essentially doubled down on their position and said the government position is clearly that those covered expenses paid with the proceeds of the PPP loan, which would in any other instance be deductible, to the extent that the loan is forgiven, they're not deductible. And so they produced this revenue ruling 2020-27, and what that revenue ruling said, that's deadly to the analysis. I might have it here. Yeah. So if the taxpayer or plan borrower has a reasonable expectation, not definitive, but just a reasonable expectation that the expenses paid with the proceeds of the loan are going to be forgiven, then the expenses should not be deducted in the current year. Thus, it's a question of whether the covered expenses paid with your loan should be deducted in 20 or 21. That question goes away, and the add back has to be under current law. Where we stand today at this moment is that those expenses are not deductible in 2020, and they get added back to your book income to produce a higher taxable income. So getting back to my earlier example, if you borrowed $1 million, the net economic gain to the owner of the business, to the borrower, is going to be $1 million in, $400,000 of tax going out. So your net economic benefit of that loan was really $600,000. And of course, there's been a lot of protest and a lot of discussion on whether or not that was the intent or not. But that's where we're at right now on the guidance.
Hey, Bob, can I make a quick comment? Can I make
Yeah,
a quick
go ahead.
comment there? Yeah, and
Yeah,
the important thing to consider here is the IRS is just simply interpreting the law. They're not saying this is the right answer, this is what Congress intended. They're just interpreting the law. And it was clear under Section 265, like Bob mentioned, it was always clear that this is not a deductible expense. You know, there was no doubt. I mean, we as a tax group and the tax department, we talked about that. I said, this is clearly not a deductible expense. So when the IRS came out and made that decision, we were on board with it because it made sense. And then the second thing, as far as the timing, that was not surprising either, because, you know, when you think about the matching principle, I know that's a gap word, but when you think about matching, it made sense that since you received the cash in 2020 and you spent the money in 2020, it just made sense that it was a 2020 issue and not a 2021 issue. So the IRS coming out with their rulings on this, not really a surprise based upon just blatantly, I mean, just interpreting what the law says.
Yeah, and the corresponding revenue procedure that came out with that ruling, this slide says IRS Revenue Ruling 2020-51. I apologize, I didn't catch that. That's not a revenue ruling setting policy. That is a revenue procedure setting protocol. And so that should be Revenue Procedure 2020-51. I apologize. It provides 3 safe harbors in the event that you disallow those deductions in 2020, which is how we've been planning with our clients, and you later find out that your loan is not forgiven, or you decide not to apply for forgiveness. The latter circumstances addressed in there are probably pretty rare, unlikely. So they provide these 3 safe harbors to give you back those deductions. So you either have, the first way is to just extend your return and hang in there for a while till you make that determination by the SBA as to whether those proceeds will be forgiven or not. And if they're not forgiven, then you ultimately can include that on your original 2020 income tax return. You can also, if you file your return earlier, you can amend your 2020 income tax return and request an administrative adjustment later, get that refund through the filing of the amended return. And then finally, the Rev Proc 2020-51 allows you to file a timely filed, including extensions, 2021 tax year return and take it there. Now, it also mentioned subsequent years. The only situation I think you would have subsequent years beyond 2021 for the current PPP program would be if you found your loan not forgiven and you entered into some kind of appellate process or some kind of follow-up process asking for reconsideration future. So that was an important announcement that came out a few weeks ago. I won't say it's unbelievable to me and Dawn and Mike, but we've seen a lot of crazy things. Clearly, it's politically savvy to give this deduction to people. And certainly the politicians, you know, they're not thinking about dollars and money nearly as much as they're thinking about political gains. And so this Bipartisan Emergency COVID Relief Act of 2020, that's the bill that's being bantered about as we speak this morning, includes in that package a specific provision that says all of the expenses that were properly paid with the PPP loan proceeds will be tax deductible. So you think about the example I gave you before where you borrowed $1 million, but you didn't get the deductions. So that increased your taxable income by $1 million. And the tax on that $1 million disallowance was $400,000. So your net economic gain was $600,000. Now you have a situation where you get $1 million loan, and then you get $1 million tax deduction on top of it. And so the tax savings there are incredible. And borrowers at the higher tax rates, 35 to 40%, are going to find themselves in a kind of a windfall situation associated with this. It's interesting that it looks like that's going to pass without question and be not only applicable to loans borrowed under the new PPP program, but also extend backwards to those that started with the CARES Act. but there's nowhere that you can find in the budgetary analyses of these tax bills, you know, any consideration given by Congress to the cost of giving this deduction. So if you think about I can't remember what it is, Don. I think it was $550 billion or $525 billion of loans I talked about. You know, even if you take 30 to 35% of that, you know, that's not chump change. That's a lot of dollars that will get added to the deficit as a result of this change. But our opinion is this is garnering a lot of political support. I think the politicians have found themselves between a rock and a hard place. They just can't go home and sit on the couch for Christmas without passing some relief act. And the last copies of the act that we've been able to pull and find include this provision. Mike,
Yeah,
Don, I know you guys have.
Yeah, like you said, Bob, the cost is incredible, but think about the cash flow, because we have corporations, just for example, a corporation that if you include that PPP money in taxable income, you might have $500,000 of taxable income. Well, if Congress does change the law and allows that deduction, and under my example, assume you have $1 million PPP. Well, my $500,000 of taxable income, I'm able to deduct the $1 million that I had included originally. So now I have a $500,000 tax loss. And guess what?
Right.
Under the CARES Act, I can carry that loss back 5 years and get cash flow, you know, from 5 years ago when I had taxable income. So from a cash flow point of view, this change in the law for some businesses is going to be a huge benefit going into 2021.
Yeah, Mike mentioned to me, and he's right, that I'm sorry, Mike, and I'm going to steal your thunder if you were going to talk about the provision that specifically prevents interference with any other code section.
Yeah, so in the as Bob mentioned, the latest package, there's a whole bunch of things in there regarding the taxability, but basically what it says with respect to the deductibility of the expenses is that not only are they allowed, but they don't interfere with any of the other tax attributes that you may gain as a result of deducting those expenses. So a colleague of mine here in town, they have somebody who received the highest potential PPP loan, and 10 million bucks, and if they're able to deduct all of that and create a $10 million NOL, as Dawn mentioned, as part of the CARES Act, they can carry that back 5 years and basically refund an enormous amount of tax that they had paid 5 years ago. So sometimes you think about, okay, well, it's just deductible, and let me see how that impacts me in the current tax return, but there is an enormous trickle-down effect, this just being one scenario.
Yeah, Mike, you also mentioned, you might comment on the tax basis impact as well of these losses, because generally deductions would serve to reduce basis.
Yeah, so as part of this, again, latest package here, you would get the basis billed for the COD income that's non-taxable. So effectively, again, you've got extra cash sitting inside of an organization, and since you get the basis billed, you basically can distribute that out tax-free.
Yeah, and I think what they're trying to do with that is, if they're going to allow the deductions in the new legislation and they're going to allow the basis to be increased by the loan forgiveness, what they're really trying to do is make sure that the PPP loan ultimately has no real direct effect on equity owners' tax basis in conjunction with pass-through business entities. We're going to turn attention to sole proprietorships, because we had some questions in the past and haven't addressed a lot of those timely within the presentation. So today we wanted to touch on those real quick. Mike's going to take this for us.
Sure. So just thinking back about how a sole proprietor could have applied for a PPP loan in the first place, you can see the calculation there on the maximum amount that they would have been eligible to receive. But the reality is that since they're a sole proprietor, they don't have any employees, with respect to this tax deduction issue, how is this going to effectively impact them? Are they supposed to disallow some expense on their return, assuming the rules are going to stay with how they currently are, which, of course, as we've mentioned throughout, is totally up in the air. That amount of money that this sole proprietor received, effectively, they can distribute out to them again, and they're getting a windfall here because they don't have to add back any of those expenses. There are no payroll expenses to add back. So we see this and recognize it. We don't have, a ton of sole proprietors in our practice group that, fit this specific situation, though, as Bob mentioned, we are getting this question a lot, so we wanted to address it. The same type of thing is happening for self-employed individuals. And, again, the sole proprietor and the self-employed individual, in order to replace their income, they get to essentially include their net income from their Schedule C. Plus, again, for self-employed individuals with employees, the payroll considerations. But the reality is it still ends up with the same sort of quagmire here. They have this additional monies that was supposed to replace their income, but that's not really an expense to the self-employed individual. So again, they're looking at realizing tax-free income of, potentially up to $20,833. It's potentially possible that partners in a partnership that receive draws would end up in the same situation, though we're still kind of thinking that one through, and we do recognize that there are potentially could be basis questions there, but at the outset or in the current year, you would just have additional cash flow that you could just distribute out to the partners via distribution. And at that moment, provided they had sufficient basis, that would be a tax-free distribution. So those are just some of the things we're noticing and highlighting with respect to sole proprietors and self-employed individuals.
We're looking at state issues as well with respect to this PPP program. And Pennsylvania presents an interesting point that we just want to touch on real quickly. There's an actual different treatment in C corporations for Pennsylvania that pay a corporate net income tax, a CNI tax to the Commonwealth, versus pass-throughs. And the pass-throughs essentially have an ability to focus exactly in the conjunction with the PPP guidance and the IRS rulings, in that you have a circumstance where the loan is not forgiven, so that's not taxable income, and then the deductions will not be allowed. So that's how it calculates out, and it works its way through the K-1 situation to the individual owners, and that's the way individuals that would have self-employed proprietorship income the same way. C corporations are a little bit different. It gets you to the same end, but it gets you to that end by starting with line 28 of the federal income tax return is the base for the Commonwealth's Pennsylvania corporate net income tax return. And so mechanically, you come out with the same result in compliance with the PPP rules, but the mechanical means by which we will do that as tax practitioners will be different this year, unless the legislation is passed and all the expenses are allowed as deductions. And then all of this conversation has been kind of not a good use of your time, I guess, at that point, I would say. Carissa, do you want to do the next polling question? Oh, there it is. The last things we want to talk about is this SBA procedural notice 5000-20057. Mike talked about this very briefly, and we're not going to spend time on this today, but where you have borrowers of PPP loans being either acquired or disposed of, or ownership is changing within that group, you need to give due consideration to these rules, especially if they don't pass the legislation for the tax deductibility of the loan. But there's also an ability to challenge the validity of the loan based on the combined entity versus the entities on a standalone basis prior. And this particular procedural notice addresses a lot of the issues involved in conjunction with looking at a potential acquisition or disposition of a PPP loan borrowing company. And we strongly suggest that you talk to one of us in conjunction with that prior to entering into any discussions or letters of intent, let alone, formal documents associated with acquisitions.
Bob, I've had one situation that's come up, and I don't know if this was in one of the frequently asked questions or not. If it was, I didn't see it, but number one, of course, you have to put up the full loan value as part of the deal, even if you want to change ownership. But the other thing I found out is that the bank charges a fee to do that. And in this particular bank circumstance, it was only $3,000, but nevertheless, you are putting up a certain dollar figure, which is the loan value of the original PPP loan, plus some type of fee also, if you're going to change ownership before the PPP has been forgiven.
Yeah, so I mean, if you think about it, it really is a matter of formalities and making sure you're complying with the formalities. If you can forgive the loan prior to the transaction occurring, even better, because it's clean and done. Nevertheless, if you can't, you need to take the guidance that's offered in this procedural notice seriously and try to comply with that, so you don't run into issues that actually hold up the transaction, which is possible. So you don't want to get into that circumstance if you can avoid it. Finally, the time we have left before we answer some questions is this SBA Notice 85 FR 67809, which was a solicitation for public comments on some original drafts of this Form 3509 and 3510 PPP loan necessity questionnaires. Dawn's going to talk about this. This really bleeds out of the issue of the initial application certification that said that most borrowers paid for under penalties of perjury. They signed it saying they absolutely needed it. And it was a very broad requirement, so it wasn't specific at all. But again, because there was so much movement of those early dollars towards larger companies, they came out later and said that those companies under 2 million would be assumed to have met the certification requirements so long as they signed that signatory under penalties of perjury. But those over 2 million, that would be an open issue going forward. And so ultimately, the limited resources of the SBA in auditing these over $2 million loans forced them to try to develop a means by which they can, I don't want to say eliminate the responsibility, try to pare down the effort that it's going to take to audit all these $2 million loans. And they came up with these two particular bills, forms, Form 3509 for for-profit borrowers and 3510 for nonprofits. And Dawn, I'm going to turn it over to you, and you can go through and discuss the forms and the FAQ.
Sounds good, Bob. And Bob, I'm going to bounce a question right back to you, buddy. As you said on the last slide, go back to that last slide. As you said in that last slide, that that draft form of the loan necessity, that is still in draft form. And I know I've had clients who've received that from the bank, and the bank says, hey, you have 10 days to respond to this. Is it common for a form to be, for you to be asked to complete a form that's still in, draft form? They're still soliciting public comments, which means they're still trying to figure out if the form is adequate, and they're making people fill it out. Is that common?
No, of course not. And it's very unusual. And again, it shows the haphazard nature of all of these releases from the SBA. I mean, I think at the end of the day, I have to say that I think the SBA's done, about as good a job as could possibly be done given the dynamics of this situation, the pandemic, and the flow of information. But that being said, it has had its shortcomings, and forms like this have been incredibly troubling for the recipients, and kind of layer on a sense of accountability post date of application that probably shouldn't be done. And that's why you had mentioned earlier to Dr. Hunt that there's the AICPA opposing this. There's actually 3,000 business organizations representing 82 business organizations representing 30 million small businesses throughout the United States that are protesting this form. So while she has not really observed any movement on this form, I'm not sure yet that that's not forthcoming, and we'll talk about that. I'm sure you're going to talk about that in your comments.
Yeah, so this loan necessity form, I mean, this is for borrowers who borrowed more than $2 million. And basically, you know, it's a series of questions that you have to respond to. It's a 9-page form. There's some instructions and a series of questions relating to your loan. And I'll tell you, I mean, the questions, and I'll go through a couple of those questions. The questions do not tell the story. I mean, there's just not enough room for you to respond to tell the whole story. So, you know, it is something that we do get a lot of questions. So, you know, one of our first recommendations, I think we would tell people, hey, there's no reason to apply for loan forgiveness yet if you're over $2 million, because you don't want to have to go through the process of completing this loan necessity form. So that's point number one. You know, unless there's some other reason, you know, we would say probably defer on the application if you're over $2 million. And again, it's talking about good faith. You know, if you're under the $2 million, you don't have to worry about it. If you're over $2 million, once you file your application with the bank sends it to SBA, you're going to get a letter from the bank not too long after that that's going to say, hey, we need you to complete this loan necessity form. And again, that loan necessity form is going to come from the lender. You've got 10 days to respond to it. The SBA is going to use this loan necessity form to assess your situation, to assess it. Now, hopefully, and I'm, you know, being optimistic here, as we know, anybody who has loans over $2 million are going to be audited, quote, audited by the SBA. Hopefully, when you complete this loan necessity form, if all of your ducks line up in the right row, and if everything looks legitimate, hopefully this reduces the number and the amount of time, the number of audits from the SBA for folks over $2 million, and the amount of time that's going to be required for you to respond. So in the right situation, I'm hoping, again, being optimistic, that the completion of this loan necessity form may actually reduce the amount of time you're going to have to spend with the SBA at some point in the future when they audit your loan. Again, I'm being optimistic, but you know what? You know, it's basically going to help them sort through who they really want to look at and those who, you know, who are obvious situations where the $2 million makes sense and they're not going to dig in much further. So
I just wanted, Don, if I could jump in there, I apologize for interrupting you. Don and I have spoke together for many, many years, and it's hard when he talks not to have some add-ons because he sets up such an interesting conversation. I guess my thought would be the issue is going to be right that ultimately, if it doesn't allow you to tell the whole story, you're going to find yourself, you know, adding on to this in a post-decision appeal process of some type going forward. And so, you know, Dr. Hunt's suggestion, Dawn, to start looking at this form now because she's not heard anything, should be focused on a little bit by the people on the call. But I agree strongly with you. We wouldn't file it now, just in the event that it's not changed later. The appeal by the AICPA and these business organizations representing small businesses has to do with the quality of the form, the information that's being provided, as you said. So ultimately, you know, it may have to be filled out, hopefully not, but it's limited in what can be disclosed and serve as a decision-making platform for the bank, right?
Yeah, absolutely. And, you know, I have worked through a couple of these forms with clients, and Bob, you can skip to the next slide. And the next couple of slides for everybody, and kind of just walks through this FAQ 53 and talking about the loan, this loan necessity form, kind of walking through the language included in FAQ 53. I'm going to walk through some of the questions, some of the specific questions in this loan necessity form, kind of just to throw out some examples for you as far as why we're concerned with some of these questions. So there are a couple pages of instructions, and I don't have this on the screen. I apologize. You can find this pretty easily on the SBA website. Couple pages of instructions, and on page 2, bottom of page 2, there's a business activity assessment. The very first question, it's asking for the borrower's gross revenue in the second calendar quarter of 2020. The next question right under it, it says, what's the gross revenue in Q2 of 2019? So they're asking you to compare 2019 to 2020 with the thought that, okay, if your business is struggling, we should see a decrease in your revenues. Well, we all know that that doesn't tell the whole story, because the second quarter of 2020 may not have had any effect because, you know, Corona hit March timeframe. Second quarter may have been a somewhat normal timeframe. You may have been crushed in the third quarter. You may have been crushed in the fourth quarter, or in some situations you haven't felt it yet, but it's coming. In 2021 first quarter, you're going to get crushed because, you know, you're lagging behind where the rest of the economy is. So like I said, it doesn't tell the whole story, just responding to these questions. So because of that, what we recommend is as you go through and you have to complete this, there are spots on here for you to provide other information and descriptions. And we recommend that you provide as much description as possible. For example, in my example, you know, if your revenues didn't go down in the second quarter, but you're anticipating that they're going to get crushed in the third and fourth quarter, put that in there. Put as much information as possible. If you laid people off on March 15th, got your PPP loan on March 20th, and then rehired those people on March 21st, put that in the application. Explain what you did and the fact that you did exactly what you're supposed to do. You brought people back. And also put in on the form that under no circumstances without the PPP loan would you have brought those people back. You know, so be careful and think through your application. And I've reviewed several of these, so let me review them before you send the applications in. Let us review them, because hopefully we can add some additional thought and additional comments that'll help you get through the process. I'm gonna just go through a couple more of the questions. It talks about, did you alter operations due to COVID-19? Well, when I read that, it says, did I alter operations? No, I didn't build, you know, I didn't build anything. I didn't change what we were doing, but I had people coming into the manufacturing facility and they weren't manufacturing product because we didn't have any inventory. But I had them paint the walls. I had them clean up every day. I had them paint the machinery. I had them fix the machinery. Those type of things are important because it tells you that while you had people working and you were paying them, they were not being productive. And that's part of the COVID issue, is just because you had people in, perhaps they weren't productive. And the only reason you had them in is because you received the PPP money. So you want to go into detail and explain as much of that as possible. So what I'm basically saying is read the question and answer the question the way you want them to read the answer, because I think it's very important. You can change the meaning and how you word your response. There's also some liquidity assessment questions in here. For example, in the liquidity assessment on page 5, it talks about how much money did the borrower have in cash and cash equivalents the quarter before you got the PPP loan. Well, that's not a great question. You know, I might need a lot of money. I might need a lot of cash on hand for working capital purposes because I need to buy inventory. Just because I have $2 million in my bank account does not mean that I don't have a financial need and I didn't need the PPP money. So when you respond, it says provide supporting documentation. So when you provide that supporting documentation in this situation, provide as much information in that supporting documentation as you can. Put in that supporting documentation that you need it for working capital because of points A, B, and C. And, you know, put as much information in that supporting documentation to support your cause as possible, which will help you get through this process. Like I said, this thing is about 9 pages long, different questions. I think the supporting information you provide is very important. They ask for the amount of distributions you made to owners. And, you know, don't just put, hey, we made $1 million of distribution to the owners. Put in that you made $1 million of distribution to the owners. That was for tax distributions or for tax payment purposes. That was because you were contractually obligated to do it in accordance with the bank covenants. Whatever the case is, don't be afraid to go into a great amount of detail during this, when you're doing this application. Because remember, you're telling the story with the hope that they read your story and it's so telling that they don't need to come in and follow up and ask you more questions. I know we are short on time, so I'm going to stop there. Right at 12 o'clock, Bob.
I just want to make a couple more comments on this form before we move on. Keep in mind that the SBA issued a notice setting drafts out of these forms on October 26th, so just a couple of months ago, and they had a 30-day comment period, which was a rather short comment period. but they did that out of necessity. So that comment period just ended a few weeks ago. So we haven't seen any input from them or any modifications of anything here by virtue of those. I think what's alarming is when you combine it with Dr. Hunt's comments that the political leadership of the SBA is going to change. We may not see that for a little while, any changes to these. But I think, once they issued that ruling on October 26th, or that notice, there was a lot of questions and people were asking different things, so they issued this FAQ 53. I think just a couple things on the slides that are on the deck is, one is that when you get that questionnaire, it does not necessarily mean that they're questioning your certification or challenging it. They're just looking for more information to base that on. The problem is they said that decision is going to ultimately be made on a multi-factor analysis, and they don't really have a description of what that multi-factor analysis is as well. The other thing I wanted to point out is this particular slide where it says in the review that the SBA does of this loan necessity questionnaire, they may take into account the borrower's circumstances and actions, which are pretty much laid out as Dawn described in that form. But what's alarming is both before and after the borrower's certification. So I don't know why circumstances occurring after your date of certification would be relevant at the beginning. I mean, the requirement to borrow PPP proceeds was so broad that there was a lot of uncertainty. I don't know how anybody on earth could argue that, when there was a World Health Organization disaster as well as a national disaster, pandemic disaster, that you could argue that there wasn't some significant level of uncertainty at that juncture. So to look at post the date of application, activities in the company, unless they're abusive, unless you borrowed the money, of course, and went out and bought a $1 million ski lodge in Aspen or something, you would suspect that, that wouldn't be considered in conjunction with making your loan forgiveness decision. But those are the reasons why Dawn and Mike and I think, let's hold off if you have a loan greater than $2 million. Try to actually prevent this form from having an impact on your loan forgiveness, with the hope that all of those organizations that are jockeying and lobbying to fight a better way to do this comes about. There'll be greater scrutiny of $2 million loans and above in the future. There's no question. But there has to be a better way than this form, and let's stand by and wait until that pops out. I think, as Dawn said, we're kind of out of time, so we wanted to take some time and answer some questions if we can. I'm not seeing the questions on my end, but if you guys, I don't know where those questions are coming up, but if we want to take a shot at some of those questions for.
Carissa, do you have a final polling question you want to put up there while we answer some of these questions?
Yeah, I'll throw up number 7 for you guys. And I want to mention anyone who has to hop off here for time constraints, I'm going to send a follow-up email after today's session with the slides that we presented, along with the emails of everyone on the call today. So if you do have questions and you don't have time to submit them now or listen to any potential answers, you will have the ability to reach out to any of the speakers today via those emails that'll come later today.
Thank you, Carissa. We appreciate your help today. And we can start to take a look at some of these, Mike.
Yeah, some of the more basic ones that I was able to answer, I did reply back to those that were asking those questions. Let me just look at here and see what we have here. Here's one. If your loan's not forgiven at the time of, I guess, the issuance of your financial statements, you got to list a long-term note per GAAP. And if you're a C Corp, do we have any thoughts on how you would address the deferred tax perspective? I mean, that's something that we didn't touch on, but I think something that I guess definitely needs consideration. And I guess, every circumstance, because it's going to be a little bit different there. And the person that asked that question, I do have their information, so we could gather something and get back to them. But that's one question I'm seeing.
Yeah, I Mike, you stuck me, and I apologize to the group, the audience today. you're talking to three tax guys, and a gap question like that, I would have to throw to Jeff Ford or John Yannick. I'm positive either of those could, and Mark Bolstikoff could answer that off the cuff. We'll get a response to you on that question, and apologies to the group for not being able to answer that off the cuff.
Yeah, I mean, one housekeeping item is the slides will be available for everybody. We've got that question a lot. So the slides will be available for everybody.
Okay. Hey, Mike, there's a question here by, I know who the individual is, you know, good friend of the firm. His question reads, Dr. Hunt said, quote unquote, economic need was always part of the original loan app. I think she said that when we were talking about the loan necessity form. And he says, but I don't believe that is correct. It was economic uncertainty, which is very different. And could she address that? I know we didn't follow up with that. That is a great catch, Dan. And I agree with you completely. I caught that as well. I didn't want to call her on that particular point, but it was economic uncertainty and it was not economic need. Economic need was never a specific requirement on the front. I think the issue is that if your loan is found not to have been needed in conjunction with economic necessity or uncertainty in the future, and it's not forgiven, I think the situation is one that you're not going to be penalized. They realized that that was a very broad hurdle to jump over. I guess a very low hurdle to jump over at the beginning. And if your loan is found to not be forgivable, you're not going to be penalized if you set it up as a loan or you ultimately or alternatively pay it back. So that's a good point, a good question. I'm glad that was asked because that was I think a misspeak by Dr. Hunt.
Here's one here that I can answer, and I did answer this person already, but it might be relevant for others. As somebody asked, okay, I've reduced head count. I'm assuming my only option is to use the full form 3508 as a result, along with the loan amount. It's possible that you could find yourself in that circumstance, but if your reduction in headcount is related to some of the bona fide reasons, for example, somebody retired, or if you offered somebody their job back and they did not accept it, that does not reduce your FTE equivalency ratio, and so you don't have a reduction there, and so you could still utilize the EZ form in that narrow circumstance.
Okay. Do we see other questions on there? Okay, so there's another question, Mike, that follows in conjunction with your and my discussion earlier about the total dollar amount of expenses. And so the question reads, so again, comma, if for example, my PPP loan was $500,000 based on, again, 10 weeks of covered payroll, and I have payroll costs for 8 weeks to cover that $500,000, do you recommend submitting rent or utilities if not needed? I am employed for a nonprofit. I'd rather limit my expenses to one bucket so that the other funding can be used for other expenses. I don't think it's required. I mean, I think you have to spend those dollars that you borrowed in that 60-40 split, and if the 60%, the payroll covers more than the loan, I don't think you're required in any way or any information that I can remember reading that requires you to disclose your rent and utilities and other covered non-payroll expenses if you don't want to. I think the discussion that Mike and I had, and Mike, you chime in, I don't want to put words in your mouth. Our thought was just that when you put in extra expenses, if you will, extra with quotes on, you're kind of building a little bit of a cushion in case any of your expenses are later challenged.
Yeah, and that's a great point. And I wonder also too about this question, if we're aiming at something else here, you know, with respect to, you know, how you're utilizing the original 500,000. I mean, I don't know if they're suggesting that, you know, hey, I want to use this all for payroll. I mean, I think the point of the loan forgiveness application is, can you substantiate the full amount? It doesn't matter if it's payroll or something else, you know, as long as you meet those ratios. You know, the point is really just, can you gather all of those expenses, you know, that would meet or exceed that number? So I'm not sure, and that person I am going to send a private message to there with my information. We could talk through that one a little bit further, because I just want to make sure I'm fully understanding if there's something deeper there in that question.
Okay. I think we have another question that says that, just a comment that notes that, you know, I believe you also get an exception if your headcount reduction was due to a CDC order or a state equivalent order. And I would tell you that that's correct. You see any other ones there that we've missed? I think that's pretty much.
Yeah, I'm just trying to see. I think that's mainly all the ones, and you know, there were a number of questions related to, you know, what do we do with the over 2 million and the loan necessity questionnaire, but we did address that. So I think we're good on those questions.
Mike, there's also a question in the chat about headcount reductions.
Yeah, and I have another FTE question, Mike and Dawn, I want to throw out from one of our clients. If an FTE was brought back several weeks after getting a PPP loan and no adjustment was made to their salary level or their work week, does the fact that they didn't get paid during those several weeks trigger a reportable wage reduction for that particular employee? Guys?
I don't think so. If you're utilizing the safe harbor provision and you restored them to their salary level by or at or on December 31st, you did not have a wage reduction there.
Okay. Okay. I think that's the right answer as well. I think we've answered all the questions that are there.
Well, Bob, here's one that's a timing question on the application. What if our headcount is reduced because of the nature of our industry and we were not able to apply due to the lender's portal not being available until after our covered period had ended? So I think what they're asking here is, you know, look, if we're going to utilize those safe harbor provisions, this might be a question that may have emanated from some older rules. I'm not specifically sure here, but I guess what they're asking is that, hey, we reduced them, you know, because we're in hospitality, and I guess maybe they're saying they would have restored them, but due to the restoration provision, they had to wait a substantial period of time to apply, and so thus maybe they're not able to utilize the restoration provision. You know, in other words, maybe they let those employees go after their covered period had ended. I know we've wrestled with that one.
Go ahead.
We've wrestled with that one for some time, and I know we've been asked that question, and I don't know that we have a great answer for that one as of yet. Only noting that we realize that's an issue.
Yeah, it is an issue, and I think that kind of issue almost has to be discussed with the lender on what can be done about that, because, I mean, if the lender's portal is not open, I mean, I don't know how you answer that. We could talk to that person later if they'd like to contact one of us and see if we can answer that in more detail.
Yeah, so other than that, I think that's pretty much all the questions I see as being, you know, the open questions right now.
Okay. There was a question from an individual that wanted to know with respect to the loan application, what should be uploaded for proof of ownership. So you had an S corporation and an employee/owner. Should we still be listing the owner on line 9 instead of as an employee?
Yeah, and Yeah, this
I think
is.
I think there's a 5% rule. I think there's a 5% rule, right? If you're 5% or more, you need to be listed as an employee on the. I'm sorry, need to be listed as an owner on the owner line. Mike, do you agree with that?
Yes, that's correct. But this person's asking, how do you substantiate your proof of ownership? I guess that would be your organizational documents or stock certificates, anything like that.
Yeah, I'm not sure. I mean, I know that's a requirement, a request, an information request on the application, and the SBA, but you might ask the lender what they would accept as that proof of, as evidence of ownership. It's hard to imagine they're going to actually want to go as in-depth as requesting the actual stock certificates as that proof. But that's really the only ultimate proof that you have for sure. You know, you might be able to do that by affidavit. You'd have to see what that lender says.
Somebody asked, do you think it's unusual, hold on, let me just find it here. Their business applied for forgiveness and were informed by their lender that they'd been approved and submitted to the SBA on September 10th, and the SBA would issue its decision within 90 days. As of today, they have no decision from the SBA on forgiveness. Do you find that unusual? I mean, I think given your scenario that Bob, that you mentioned about somebody had applied on December 7th and obtained the forgiveness on the 14th or something like that, where it was a quick turnaround.
Yeah. Mike, I'm sorry, could you read the question again? I apologize. I just lost my train of thought there. If you could just read it again, then I'll call.
A business applied for forgiveness and were informed by their lender that they had been approved, and then that was submitted to the SBA on September 10th. And that SBA would issue its decision within 90 days. But as of today, we have not had a decision issued. Do you feel that this is unusual? And I think you mentioned
I do feel that's unusual given what we're hearing from our clients. We're finding out, and even the comments that Dr. Hunt said originally, you know, that a bank had submitted 118 applications that had been given to them over a few week period, and they were all approved within a week at the SBA. I think, you know, they do have 90 days by virtue of the language in the CARES Act and the FAQs setting out the procedural requirements. But we've not seen people we've not seen a lag like that yet, Mike. So I think that is exceptional. And I think that individual borrower, they can talk to me or you or Don, but I think we ought to, you know, guide them to talking to their lender why that's happened, because their lender should have submitted it, you know, well before now.
Yeah, I would get documentation from the lender that tells us exactly when they submitted it to the SBA, because the SBA may not have had it for 90 days yet. I would just confirm with the lender when the application was officially filed with the SBA.
Yeah, it sounds to me like when you hear Dr. Hunt's comments, Don, that this lender did not submit it to the SBA. It might even be an oversight or an inadvertent exclusion. They may think they've submitted it to the SBA, but you would think they would be tracking all loan forgiveness recommendations to know what the outcomes are on the other side once the SBA reviews. But that fact pattern definitely has to be taken back to the lender for follow-up. I think that's pretty much all of the questions. We thank everybody for attending today. We appreciate your attendance at the other two webinars that we had on this topic, and we hope that the information that we were able to convey today is in some way helpful to you in moving forward with your loan forgiveness application and obtaining loan forgiveness. We expect that there will be a tax bill or a stimulus bill soon, and we do expect that there'll be a new program. Our hope is that the new program will ultimately include, you know, more dollars for PPP, and that the provisions of that PPP program, which would really be round 3, right? They're talking about round 2 in the papers, but it's really round 3. If it works similar to the other one, it should eliminate a lot of the complexities, because as Dr. Hunt alluded to at the start of today's presentation, we've had, you know, 9 months now to build an understanding of where we're heading on these issues, and it's, you know, we're a great deal ahead of where we were at the beginning of all of this. But we will keep you informed. You can go to our coronavirus resource center on our website. Daily, we update that as developments come out. If situations dictate, then of course we'll have a fourth webinar on this same topic on the new program going forward. But this will probably serve to be the last webinar that we do like this with respect to the earlier PPP loan programs. If you do have specific questions, again, I've spent a great deal of time with these issues, as has Dawn and Michael. Feel free to contact any one of the three of us, and we'd be glad to assist you and help talk through the issues that you're facing, both on the for-profit business side as well as the not-for-profit organization side as well. We understand that, you know, we've used up a lot of your time today and in these earlier sessions. We appreciate your attendance. We appreciate the support that all of you show us on a daily basis in our firm. Recently, at the end of September, we celebrated the 30th anniversary of our firm's life. Started with 3 people at one point, and now, you know, with the addition of you know, great people, you know, we've been able to build to where we are today. That we've gotten to that point with all of your help is not lost on us. We understand that the people that support this firm and the stakeholders in this firm go far beyond the employees and the professionals here. We want to thank you for that support. We hope that in this very strange year, you all have an opportunity to enjoy a lot of time with your family. I guess we've all been enjoying a lot of time with our family already, but that the hopefulness of Christmas and the holiday season provides all of you with a new lease on life and gets us excited about a better 2021 from the health issue and a return to normal business operations, or let's say closer to normal business operations. Have a happy holiday. Thanks for attending.